How's it going, everybody? My name's TradeX, this is my trading den, and today we're going to wrap up the Thursday, the 30th price action, okay? Now, before we get into that, if you're new, welcome. Please do consider smashing the old like and subscribe. Does the channel well to good and helps other viewers like yourself view this content, alright? So without further ado, let's get the intro rolling, and then we'll jump straight into the good stuff. Let's get into it. Right, let's get straight into the meat and potatoes. Let's get straight into the good stuff, all right? I'm going to start here. I'm going to start in the London session because there's some stuff, some good stuff to get our teeth stuck into, right? Now, what I was looking at, and for those of you who have been following me for a while, you know that I like 15-minute volume imbalances, okay? And so we're going to look at this volume imbalance on the 15-minute. And you can see it formed here, right? And so I was looking to see initially how price was going to respect it, okay? Why was I looking at this level? Why was I looking at this specific level? We'll jump into it. Let's look at the daily, the hourly, which is up here, and break this price action down. So we had this BISI, this buy side imbalance, sell side inefficiency, and at that time we still had relative equal highs and buy side above this high and above this high, and we had the volume imbalance on the daily, right? So those of you who know, you'll know that I've been targeting this volume imbalance to come and take these highs, right? And today was the day that I anticipated that to happen. Why? Because of what price action was painting. So we had this institutional entry order drill on the hourly, and an institutional entry order drill is when a candle literally dips into the wick and gets straight out of there, right? This is a very, very bullish indication. So I got to my desk during lunch and saw this price action. I didn't trade lunch, but I did see this forming. Reason being, I'm absolutely shattered because I drove 9 hours yesterday, but I did trade in the New York session, took 30 handles today. So we're going to break that down. But I just want to talk about the London session because it's important. We had this institutional entry order drill on the hourly, and we had these highs to take and this volume imbalance for price to run up to. This candle on the hourly was my signature. So then I was looking at lower time frame for confluence as to why price was going to run higher from there, and looking on my lower time frame, so 15 down to 1. For those of you who trade with me, my trade screen, I have my daily up here, hourly for directional bias and searching for liquidity pools, and then I use my 15 down to 1 as my trade entry. So I'm looking for an entry on my trade screen, which is this lower pane, for me to then take positions. And I start on the 15, work my way down. And what do we have here on the 15? We have this 15-minute volume imbalance. So I'm going to drop down to 1 minute. We're going to go back to that 15-minute volume balance, and what do we get? We had price respecting it continuously. So when price got back above it, this was your entry. Bingo. What were you doing? What were you targeting? You were targeting this volume imbalance, okay? You were targeting this volume imbalance. If you wanted to be really tight, you could look for confluences and standard deviations. And 2.5 standard deviations is a standard target. It's usually where price maxes out before it gets a little bit ropey or it starts to look for periods of consolidation. And the way we take standard deviations are, we look for the swing low before the aggressive displacement leg, before the move higher, and we measure that out. And we have 1, 2, 2.5 times standard deviation. You literally could have held all of that until it reached 2.5 standard deviation. You would have been in the trade for a long time, but patience is key, right? So this is how I would have been measuring out my trade if I'd taken it, and you can see that price came up and almost top ticked it, right? Around 6:30. Okay, so that's how you would have been framing an entry, or an exit, sorry, once you got your entry. And that still would have kept you below this low, but it would have taken this high out here, right? You would have taken this high out, okay? And for price to then run up and come and take this high later, okay? But that would have been a low-hanging fruit. Now, if you missed the volume balance, what did we have? And today has been the day of BPR. It doesn't happen every day. In fact, it happens sort of once a week. But this is the sort of BPR I like, and it's when we have an up close and a down close of exactly the same height, just above or just below a fair value gap. And I treat them as lines in the sand. And you can see how price came back again, hit that 15-minute volume balance, and then respected this BPR. Now, I don't mind if BPR gets broken through and comes back, but once it's broken through once, I'm then looking for it to be respected. And I'm looking to take my entry off consequential encroachment of the BPR. So I'll be measuring out equilibrium point, and that's where I'll be framing my entries long. I'll be taking entries off that if I missed the 15-minute volume balance entry, okay? If you missed that one, you had another entry. So you could have jumped down onto the 5-min chart, and the 5-min gave you another entry. So let's go and find that piece of price action again. Let's go over here. Zoom in. Right, so this line here is this old fair value gap. Draw it across your chart. You can see how it's respected. This old fair value gap. So what is this? So this is an old fair value gap that is now inverted. Okay, so this is an inversion. And so this is a technical piece of technical, and this is why I wanted to run through it. So you had a volume imbalance, you had BPR, and you had an inverted fair value gap. All three in one piece of price action. Juicy, right? That's why I wanted to cover it. And then, same premise, you'll be looking for the standard deviations, and you can see that we had confluence here, right? So we had confluence at this level. So the idea of standard deviations, ideally you want confluences across 2, and this is 2 times standard deviation, this was 2.5 times standard deviation, all right? Again, this is the swing low before the aggressive displacement leg high. So as soon as you see price moving away, this is where you'd be looking to start framing, sort of dialing in your exits, okay? And so that's what the target would have been, okay? And then if we just jump back onto, so you can see how price came back, respected that inversion fair value gap, and that was a third possible entry to go long, all right? That was a third possible entry to go long. You actually had a fourth, right? This is how much the market makers were giving you opportunities. It was a free for all. They were just dishing out VIP tickets today, right? So again, we have BPR. We had this 2 candles of exactly the same height. We're looking for a CE of that. We're looking for price to test it, and then we're looking for entries off of it. Okay, and so that would have been your last potential entry before the price aggressively moved to that target. And if you got anywhere down here, if you got in the 50-minute volume balance, that was 70, and you got out at 80, there's your 10 handles. Bish, bash, bosh. Thank you very much. A London session done and dusted. Right, so now I want to cover the return of the Mac. The return of the Mac. This is TradeX's, and I am TradeX for those of you who might be confused. This is my own, very own coined 3 drives pattern that has happened today, and I absolutely bagged off it, and so did many. Looking at my direct messages on Twitter, so did many, right? And why was this a valid 3 drives pattern? I will tell you why it was a valid 3 drives pattern. Because if you'd watched my video on 3 drives pattern, and I'll put a link up here so you guys can watch it afterwards, and I highly suggest you do because it forms a hell of a lot, and there's a bearish and a bullish example of it. This is a bearish example. We are looking for price to run into a higher time frame PD array. What was the higher time frame PD array, I hear you ask? It was this volume imbalance on the daily chart. And guys, just for reference, I use the continuous contract with the current contract in front. So if my chart looks slightly different to yours, that'll be the reason why. There's no right or wrong. I personally just prefer it. And so the volume imbalance on the daily up here was my draw. Where was price during the AM session? It was running into that volume imbalance on the daily, right? So this validates it as a 3 drives. And you can see I've marked it out before I jumped into this lesson. Drive 1, drive 2, drive 3. What are we looking for? We're looking for the highest up close candle inside of the middle drive, because this is a hidden order block. So please guys, go and watch that video. And if we drop down to the 5 minute where it's super clean, we can see it here. And I often do this if it's over a long period of time. I drop onto a 5 minute and look for a concise candle, right? And I'm always taking my entry off the body, the highest part of the body, so the close price of the candle, all right, on the highest up close green candle. I draw that line across my chart, and I'm therefore waiting for price to return into it to take my entry short. And guys, bingo, there was your entry to go short right there. That was the trade of the day. There was your entry, my 3 drives pattern into a high time frame PD array to go short. Okay, I actually took this trade, and I actually took this trade, right? And the reason why is because we had a breaker block down here, and so I'll talk you through this. All right? This is a breaker block. So if we just jump onto the 5 minute again very, very quickly and draw this across. And apologies if you can hear my cat crying in the background. But this, my friends, this is a 5 minute. This is a 5 minute breaker block. Right? Breaker block. Jump back onto the 1 minute, and we can see how price ran to that breaker block. What do we know? That if price has swept the buy side, what is it searching for? It is searching for the nearest breaker. So we'd swept the buy side, we'd run into a high time frame PD array. What were we searching for? We were searching for this breaker, and we had one on the 5 min. And so I took my entry short up here, and I ran it down to this breaker. And then because I knew that price is likely to retest that highest up close candle, please watch my video because I explain it in there. The price is very likely to come back and retest this highest up close candle. I took this trade long. And if you want to see my trades, jump onto Twitter afterwards. All my trades are posted on there, and they're timestamped so you can see when I took them. And then, guess what? I went short here. So I was absolutely dialed in today. I took literally every swing and caught today. It was a fantastic day. But This was your entry to go short. What would you have been targeting? You would have been targeting price to run down into a discount. Why? Because we were in a premium. And once it's hit a premium, what are we running down to? We are running down to a discount. Okay, where was the discount? It was this fair value gap that had been left open. Okay, so it hadn't been full. So earlier on when we had that institutional entry order drill, it hadn't been properly filled, so price was likely to come back into that BISI to fill it. Okay, so price just step down all day long until what? Until we got down into that level. Now, before I break down this price action, which was post-lunch, because as you guys know, I do not trade lunch, so there's absolutely nothing for me to talk about, let's quickly jump onto RTH. Now, RTH hours is your close and open price. So this is yesterday's close, this is today's open, and as we know, these are gaps. And what the gaps like to be done, what the gaps like to do, they like to be filled. And so the discount of this range was here, so this OTE range. So price ran down, and we had another confluence that we're inside the OTE zone of the RTH gap. Okay, right? This is a fully packed what you get inside a red pill session, right? So this is what we do daily, right? This is what we're about. And what we had when we were here is we had a turtle suit. So we got down into a discount. We got down into a 1 hour higher time frame BISI that hadn't been rebalanced. So now what are we looking for? We're looking for price to then do what? Run back into a premium, right? So we had a very, very technical reversal. We had the sell side here. The sell side got purged. We had relative equal highs. They got taken out by a couple of ticks. This is now a validated market structure shift. We will then have this fair value gap, which is now an inverted fair value gap, right? This is now an inverted fair value gap, right? And we had the bullish order block. This is median threshold of this bullish order block. Bingo, there was your entry. I just told you why on the high time frame. Now we're looking at my entry screen for entries to go long. What are we therefore then targeting? Low hanging fruit is going to be what? A breaker block, because if price takes out sell side or buy side, what's it running to? It's running to the nearest breaker. Where was the nearest breaker? It was up here, right? So price ran into it, and we found a little retracement before price punched through. I mentioned to everyone this was my line in the sand, and if price decides to break through that, it's more than likely we would be going to take the buy side, okay? Because it had no reason to run lower once it had. If it was either going to break from here or it was going to go and run buy side, it was either or, okay, and run into a higher time frame premium. And you can see that price ultimately fulfilled its objective of taking these buy side pulls, okay, all of these buy side pulls. And so I didn't trade any of this. My trades were all done and dusted by here. All of this was just chopsville. We were also inside of a range, so there was nothing really clear and identified for me to take a trade. We got up to the new weekly opening gap and we were rejecting off it. But there was also arguments for it to go long. So I just decided to stay out, right? Which is a good thing to do if stuff isn't highly probable. So guys, that is going to cover today's session. I hope you found it useful. As always, please do consider smashing a like and subscribe. And if you do feel like jumping in red pill, hit me in the DMs and Twitter. And we can make that happen. We still have currently a few spaces left, but as soon as we get to 150, doors close. And then it'll be whoever leaves or the position will open up and it'll be a waiting list. And so that waiting list is growing. But people are obviously just funneling in as and when at the moment. So if you want to get on it, hit me up in Twitter or in the comments, and we'll make it happen. So until next time, guys, trade safe as always, and I will see you on the other side. Take care, guys. Bye now. Bye.